Hi, it is Wednesday, August 1st, after the bell, and we're taking a look at the S&P 500, starting off with a look at the 5-minute chart and what has been going on so far this week. Especially today. We had the Fed meeting today. Statement came out at 1 o'clock, at 2 o'clock Eastern time, and then after hours we've had Tesla earnings. And after hours we've also gotten some news on tariffs that they're pushing out the deadline on those two from August 30th to September 5th, but Trump has asked them to study the effects of increasing those from 10% to 25% overall across everything, and not just the few that are out there now. So anyway, that's what's going on. Market has got the worst possible scenario from the Fed statement, alluding to that there's probably going to be not one but two more increases this year. Plus, you've got that stuff piling up, the bad news piling up about the tariffs. So here's what happened. We got up to a high today here in the morning, came right up to this fail point that we got up to last Tuesday, the previous week. And I'll back out and explain that in just a second. And then just began a sell-off from there. And initially the sell-off held last Friday's low and tried to make a little bounce, but failed very clearly here at the 20 EMA line on the intraday chart, and went down and made a lower low, setting our low now for August and low of the day and so far for August at 28.05. And you can see here that there was only a single 5-minute close below Friday's low, so they recovered this right away. So clearly there are some stops and some commitment here at this Friday low, the low that closed up the final week of July. So tomorrow I'll probably be looking for this to turn around in here, see if these become fail points once again, today's low versus this 28.08 level. And still working for us, an early sign of failure is a break of 28.11. This is a halfway back that goes back to a big range day that happened a couple of weeks ago, and it has worked really well for sort of judging the temperature of the market. Above 28.11, we're a little more bullish. Below it, we're a little more bearish. But now that we're failing the 10-day simple moving average, it doesn't feel so bullish just being above 28.11 anymore. And you can see that at the end of the day, the high came right up here, failed directly off of the 10-day simple moving average, and we pushed down, and now we've put in 3 closes in a row below that. Our 20-day simple moving average has moved all the way up to 28.02 now. So it's coming right up behind us, like looking in the rearview mirror and seeing a speeding car coming towards your back end. That's what's going on with the 20-day simple moving average right now. So it wouldn't take much of an effort on behalf of the shorts tomorrow to push us down below. So me personally, I'm positioned completely short. It would be pretty easy with a couple of minor tweaks to reposition long again, but I went home net short today. What I think we're setting up here is a head and shoulders pattern that takes us all the way back to last Tuesday. And I mentioned this same spot that we failed at today. We made a slightly higher high over yesterday, but failed at this 28.2576 level. That's right where we failed as well last Tuesday. We gapped up. We gapped up. We hit that big high up at 28.30 basically. We sold off, and then we tried to regain some ground at the end of the day, but we couldn't get back again past 28.25. And then on Wednesday when we came in, we spent quite a bit of time churning and trying to get out from under that 28.25 level. And then finally Trump came out with his press conference. He had his meeting with Juncker of the EU, or what is he, like the president of the EU or whatever the hell he is, the guy who came over representing the EU to talk about a trade deal. They came out, they had a joint news conference, and boom, we got this big rally up to what is now our swing high. Our high for Q3 was our July high as well, and it really represents our best effort at going after the all-time high and the January high up at 28.72. This is the highest level we've been able to reach since setting that high in January and falling down to 25.32. So anyway, that's what's going on as far as this head and shoulders pattern goes. The way I judge them, especially on these these little short-term time frames, like when you're looking at one that just spans across a few days. I draw a line from the top of the left shoulder through the bottom of the right shoulder and let it extend on down, and then I just watch for price to gravitate back to there. Sometimes it stops right on that line, sometimes it pierces through it a little bit, and sometimes it doesn't quite hit it all the way through. But if it does in this case scenario, I don't know if sometimes QuickTime on Thinkorswim don't let me do things at the same time, but here we go. You can see if we were to fall down here, we would be going all the way for this gap here, which we know is basically that's our next target on a break of the 20-day. There are all these levels in here that we could possibly hold at, and if people are in there, if players are in there setting up option bets to screw everybody over, we could just keep holding on to these levels, and it could take a lot longer to get down to this gap. But in its natural form, if we just were to break the 20-day, really we've got 2781 on deck. That's gap support. Here is that target line for the head and shoulders, and then filling that gap would take us down to 2774. That was on the July 11th close, and our overall halfway back for July and for the quarter is 2773. So it fits right in there. Here's a close-up of the roadmap. You can see here's the 10-day simple moving average. Here was our close today. Below it, here was our close yesterday, which was orchestrated in the final seconds before the bell rang. We were above it, and then they flushed it and closed us just below the 10-day. And then we closed below it as well on Friday. So you had, we closed up the week, ending the last week in July, closing below that. Or wait, actually, that was this here. So now I'm being too dramatic. Monday we closed below it. Tuesday we closed below it. Wednesday we closed below it. So far for the entire, for the entire week, we've been closing below the 10-day simple moving average. Here is our 20-day moving up quickly all the way up to 2802, and then from here on down we have here's that gap that I just talked about on the 5-minute chart, 2781.53. It fills at 2774. 2773.50 is our halfway back for July and Q3, and then here comes our 50-day simple moving average moving up on the outside rail, coming up to 27. I don't know, I've got like a price bubble over it right now. I'll look at it across the top of the chart here. 2766.94 right now, and it's rising, so let's just say that it's going to be like 2768 or so tomorrow, which rhymes perfectly with filling this gap, but maybe just leaving this second one open here to July 9th. And it looks like here comes the thing where, for some reason, when I'm shooting these videos with QuickTime, whatever language is going on with Java, with the way Thinkorswim works, it does not work well with Thinkorswim. So I will just sign off on this video and go on and post the update and the roadmap, and I just wanted to put this video together to just sort of talk you through what's going on. On the bullish side, we need to take out the 10-day simple moving average, the blue line up here. This is now sort of starting to roll over and work its way down. It closed at 2816.90 something today. It drifts up a little bit as we move towards it, and it sinks down as we move away from it. So it is the most fluid of all the SMAs that we watch in here. We watch a 10, a 20, a 50, a 100, and a 200-day simple moving average. Those are the ones I watch. Anyway, so if we gap up open tomorrow, retake the 10-day simple moving average and go after today's high, then the bulls are in control and we're going to go higher. I have a feeling, though, that we're going to open below the 10-day and we're going to get a nice little sell-off going tomorrow, and ultimately our target is the 50-day simple moving average. Okay, so that's it. Good luck and good trading.